Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. In today's lesson, I want to talk about my old friend MACD. This is the indicator that it was really the first indicator I ever looked at and started using way back in 1990. 1989, 1990, when I started looking at technical indicators. When I started out, I was using a 50 and a 200-day moving average, and I did that for about 10 years before I switched over to an 18 and a 40 around the year 2000. But MACD has always been the one indicator that I've used throughout all the time that I've been studying technical analysis. I wanted to go over and just spend a couple minutes going through my favorite patterns. So let's get into the agenda. So one of the things I wanted to mention about this is, I'm going to go through momentum divergence, pinch play, reverse divergence, and zero line reversals. These are all patterns that I have in my book. But what I wanted to talk about a little bit today is the sequence with which these take place most often. In other words, there's usually an order that they'll happen. And if you know that, it can be a pretty powerful tool. And then we're going to go through the individual stocks that came through, had a decent amount of requests. Okay, let's get into this MACD lesson. And I'm actually using the first chart that was a stock request that I didn't get to last week, and I'm going to do first this week. But when I pulled it up on the weekly, I'm like, wow, this has everything that I want to talk about in MACD. So it's just a great example. So let's start here on the left side of the chart. And I want to just pull up this decline, and then we get a rally back to the 18, and then we make a new low. And if you notice what happens, the MACD makes a new low with price here, but it doesn't confirm coming back down. We didn't go to a new low here. So we get momentum divergence. And what I often see, if we're turning a trend around, and we've been going down and we're shifting the trend, normally this divergence pattern is the first signal we'll see off the low. Okay, we start with divergence. That's often the beginning point of a reversal in trend. And then we get a move up and we cross above the 18. And in this case, we end up moving right back above the 40. But we're still inside a trading range. Okay, this is not broken out. It hasn't shifted the trend completely yet. And then the next signal that comes is a pinch play. So, and sometimes this can happen before we cross the zero line, and other times it can happen after we cross the zero line. And the pinch is essentially where the MACD pinches back towards the signal line without breaking it. Now, there are times when you cross the zero line and we'll get just a slight overrun of the signal line. And that's still, I can still consider that a pinch play. As long as it's very minor, in this line, this signal line is still rising. But most of the time, the best signals come when it just comes down and kisses the line but doesn't break it, especially when we get a pretty deep pullback like this. And so that's a very nice signal. I like to use two lower highs as a price pause. And it doesn't have to be, it can be sideways. It doesn't have to be a deep pullback, but it's a nice little play where we get, like I say, a little pause or pullback in price. And the MACD is telling you that it's working off the little overbought condition that it's got and coming back towards the moving averages. So this can happen inside the range, and it can also happen right after you break out. Now, in this case, we had a lot of volatility in price. We didn't get the two lower highs. We got two lower closes. But you can definitely see the pinch develop right after the breakout. And that'll happen quite often where we get two pinches, one inside the range, and then when you break out and start the trend, we get another pinch. And so you want to think about it that way, where we get the divergence followed by pinch play, another pinch play after we break out and start trending, and then we make a move up to the upside. Now, I know this is about MACD, but I do like to look at the DI lines at the divergence. So we got divergence here. Notice how we have the red DI confirming the divergence, right? It's a nice little add-on. You won't get the divergence based on ADX most of the time, but you will see it in the DI lines. It'll correlate to the MACD line. And then secondly, when we start to get the pinches developing, I do like to see green DI participating on these upside DI pinch plays, even inside the range. Now, again, we won't necessarily have ADX in play, but it is nice to have the green DI crossing above 25 and crossing above the red, confirming the signal. And then when we get the breakout move, I actually like to see the ADX confirming as well on the second pinch play. So now we move up, and if you notice, we didn't get divergence at the peak, but we did get another pinch play, but this time it was to the downside. You see how this is pinching back towards the line, and we get the little signal here, and that's a nice little trade back to the zero line. Now, if this pinch play develops right near the zero line, I pass on it. I don't like to do it. But if there's enough room to trade it back towards this zero line, then I'm willing to do it for a trade. And then we notice we get another pinch right here, but we don't have DI confirming or ADX confirming this play. So we know it's just a short-term trade. Okay, these are little things we want to just be on the lookout for. Now, we get the reversal, and notice how we make a lower low here, and we don't have divergence on the MACD line, but we have 2 layers of histogram divergence. And so when that happens, if you want to be aggressive, this is an aggressive entry, you take the MACD cross because we went in the zone and came out. We didn't have any follow through to the downside, so you could look to play this on a cross of the 18 when the MACD is crossing back above. Then we get the next signal, which is it's a reverse divergence. So this moves up, makes a pullback, moves up, makes a higher low in price, and MACD makes a lower low. So we've gone here, we've come down and made a lower low while price is making a higher low. Now, we haven't actually triggered off of this yet, but I would say coming back up, a lot of times it can be the trend line, or you can just look at price resistance at 650. If we come back through that, that would be a pretty good signal. I like to go down to the smaller time frame when I see reverse divergence and see if I can't get a trigger in. So I'd be down on a daily chart looking for an upside trigger. The last signal I want to use is, I'm going to look at Deere for this, is the zero line reversal pattern. That's where we come and work sideways after a long extended move. A lot of times you'll get this longer consolidation phase, and the MACD works off the overbought condition to just comes down and kisses the zero line and then starts to turn. Very powerful signal, and a lot of times you get a big green bar coming up through the moving averages. That'll be a really nice trigger for you to be on the lookout for. So that's how I would go through and use those signals in conjunction with the MACD. A lot of times the zero line reversal will have low ADX associated with it. Before we get into the stocks, just want to let you know my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, trying to identify, go through thousands of charts, trying to identify some of the best looking patterns, especially in today's environment where we're trying to find independent movers. The market is struggling right now. So you have to go through and look at a lot of stocks to be able to identify ones that are kind of not correlated to the market right now. So anyway, take a look at that. If you're interested, you can try the service on a discount for the first 2 months for $50 using the coupon code StockTalk. Okay, let's go ahead and get into some stocks now. Okay, so I got my 4 charts up now, and I'm looking at Regeneron monthly, weekly, daily, and then the weekly with a zigzag and a relative strength line. So one of the things I thought I'd mention is that throughout this, the rest of these stocks, there are a number of examples regarding MACD that I'm going to point out. So there's going to be a few lessons inside of this that I think are pretty important to watch. So anyway, if we look at what this has been doing, we had this strong move on the monthly that pulled back and held the 18-month line. Now, this correction that I was talking about, these 2 pinch plays to the downside, they were counter trend because look at the 18-month line acting as support. And that's why this little move down here was just a short-term trading move. I probably wouldn't even play because it's going right counter to the 18-month, and there really wasn't a lot of room there. But you'd be looking for this failure pattern where you turn back to the upside when you use the monthly. So anyway, now I think we're starting to see some improvement here, but it's still a low ADX situation. And green DI hasn't been able to get going on the daily chart. So I do like looking at this. You can see this is a pretty good marker here, this prior high. And I think 650 is probably a key level. A more aggressive would be this level, but I kind of like the 650 just looking at this. I'd love to see some green DI start to kick in prior to that. But overall, this is a pretty interesting pattern. Definitely one to watch. Look for some strength here. Okay, so Alcoa was a very late request. In fact, it came in this morning, and but it fit perfectly with what I was trying to talk about in the lesson today. So I moved it up the pecking order, and I want to talk about it. So the question regarded this pullback on the weekly chart came back and touched the 18 week. Look at the perfect parallel nature of the 18 and the 40, and the ADX is strong. Green DI confirming. We had a little pinch play in the MACD. You see that little pinch right there set up on the weekly chart. And then if you go and look at the MACD, it just barely made it back. It really didn't make it back to the zero line. So the question was, how do you get in when you don't get the moving averages to show an opposing trend or anything like that? There is an alternative entry, and that is we look for these lines to come together. Now, I prefer to see them actually kiss or get a little bit closer together than this. But if we make a move where we come back and we make you see this peak and make a lower low, and then we rallied up again and then dropped again, we can now put in a trend line here. And as long as the ADX is low, so I've got a MACD coming down towards the zero line. I've got a pinch play developing on this time frame. I can draw in a trend line and use that as an operative signal as long as I have low ADX. I can't have red DI showing a lot of power here or creating a big peak in the negative ADX reading. But if it's low like this, and the MACD is getting closer to the zero line, and I've had a lower high and a lower low, I can draw in my trend line and I can use that as a signal. Now, what I notice a lot of times, you'll get a nice green bar on the trigger, and that's nice confirmation to see when you're trying to do this. So that's how I would go about doing that in that situation where it's such a strong weekly trend. As long as you can draw the trend line in, then you do that. And so now the stock has gotten a little overbought. I'd be looking for some kind of a pullback at this point, getting a little stretched away from the 18 week and definitely starting to get a little stretched away from the 18 month as well. So Delta Airlines, I think, is showing signs of improvement. If we look at the monthly chart, we had this pullback and it was trying to hold the 18 month and then it got below, but now it's getting back above. It's fighting in the 40 month. But it is getting back above the 18 month and that line is rising. If we go to the weekly, now we're above the 18 week and we're above the 40 week. What's missing here is, let's blow this up so you can see, the MACD really hasn't gotten back above the zero line, and we don't have green DI really kicking in to any significant degree. So I've got low ADX on the weekly chart and I've got low ADX on the monthly chart. So I need to see some strength on the daily. We're starting to see green DI and we're getting close to getting this ADX above 25, but I want to see that above 25 and then maybe look to buy the first pullback. If we look at the daily, you can see there's a little bit of resistance up here around 45 and we just found it again. If we form some kind of a play like this, you could potentially buy the breakout coming up through here. If it decides to push higher first, then maybe look to buy a pullback towards this breakout area, potentially, hopefully with ADX confirming by crossing above 25. So this is getting pretty interesting. I think it's definitely worth watching because the next resistance level is up in the low 50s. Okay, so PLAB, very strong monthly chart. Big breakout of this big base. ADX is rising here. I just want to point these out when I see them. Look at this beautiful pinch play on the monthly chart that developed before this got going. And then we get this move to the upside, and now we're forming a pinch on the weekly chart and a zero line reversal on the daily chart. So I really like the looks of this. Notice how we have the zero line with low ADX, and green is even above red during this consolidation phase, showing there's not a lot of strength in the sellers. The one problem I have with this pattern is really nothing with the pattern itself. The ADX pattern is good. The MACD looks good. It's really the group action in the market. We're dealing with a market where the semiconductors come on under a little bit of pressure here if you look at some of the bigger stocks. So you have to take that into account. A stock like this isn't going to go up by itself. If the group is going to go down, it's going to struggle. So that would probably tell me I'd probably want to limit how much I want to do. I don't mind doing the pattern, but I'd probably do a little bit less just based on how the overall market looks and based on how the individual sector is trading or individual group. TWI had a really strong pullback to the 18-month with powerful looking ADX. And look at the pinch play that developed right at the 18. By the way, the pinch plays are best when they're close to the 18. When a pinch play develops away from the 18, it's a little bit more suspect. So you want it to come. I really like the ones that are sitting on. Doesn't have to be right at it, but pretty close to it. And then we got a zero line reversal pattern on the weekly, kicked in. Now we're getting a pinch play, and it's kicking in. And look at how we had a zero line reversal on the daily. So this is really showing all these patterns again. A pinch play on the monthly with a zero line reversal. That's a good combination. I wanted to go through this in multiple time frames, and I thought the best way to do it was by doing it going through the stock. So all the patterns that I talk about will happen. It'll give you kind of a confluence of time frames. So pinch play on one time frame and a zero line on the next. And then we get a pinch play on this time frame and a zero line on the next. So that's kind of how I want you to play these or look at these in multiple time frames. Now we're getting up against this old high. I would look for some kind of a pullback closer to the 18 day and maybe even form a pinch on this time frame. Lockheed Martin is trying here. We're making a pretty significant break of the downtrend line. We're coming back to the zero line on the monthly. You see how we're getting a zero line reversal, and it's actually a reverse divergence because we made a lower low in MACD on the monthly, and now we're making a higher low in price. So we have that in our favor, and now we're getting the MACD to cross through the zero line for the first time. It would be nice to get a little pinch closer to the 18-week to set this up. We're coming up against some resistance, so that might happen here. But notice what's going on the daily chart. Look at the ADX starting to kick in. If we can get a zero line reversal to develop on the daily chart, this could be a really attractive multiple time frame pattern setup. Okay, so Disney, I think, is rallying up into resistance. So we actually have a stock that got very oversold. You see how the MACD got pretty far away from the zero line to the downside. And we're coming into some pretty significant support. We can see it on the monthly chart. There's a lot of support probably around, really the bigger support is probably around 125, but really around 130. And we're getting a decent rally off this that I think keeps the downside pretty limited. The problem I've got is all the resistance overhead. Really starting right around here, 155, working up to 160. I think it's just going to be a big struggle. It's going to be very difficult to see this stock get up and going again with that 18-month kind of rolling over on top of it. So I would not be in any big hurry unless you want to trade inside of a trading range or something like that. I just don't see this doing anything significant right now. I mentioned Deere as a zero line reversal during the lesson. The nice thing about the way this played out is look at what on the weekly chart, look at how we had no red DI crossing above 25 during this sell-off. So this is a big ABC correction to the downside, and we don't have any strength in the sellers whatsoever. So when you see that, you can be a little bit more aggressive in playing this. The big question I have in this stock is, it's a big stock. It's not going to go up if the market goes down. Obviously, the relative strength in this stock has been outstanding recently, but is the market going to allow this stock to break out and take off? And that's the only issue I see with this because the overall pattern looks really good. And we're getting a pretty mild pullback towards the 18. So again, if the market can bottom here, this stock could really take off. If the market continues to sputter or struggle, maybe this works back to support in the 370 area, something like that. But I would continue to think this should outperform. So Raytheon is trying to break out here. It made a pretty nice move recently, getting through this resistance. What's missing is ADX. So. And when I say ADX, I'm talking about DI and ADX. So I can look at the ADX line in blue, and I see ADX is low on the monthly. It's low in the mid-teens, low teens on the weekly chart, and it's at 18 on the daily. We don't have any of these three lines above 25. But worse than that is that the DI lines aren't confirming either. We don't have any of the three DI lines breaking out and confirming. So it's going to start on the daily chart, and we really just haven't had the confirmation from that standpoint. So I'm a little suspect on this breakout. I mean, you could play it, but I would play it tight because we don't have that confirmation here. So if I'm going to do this, And it actually looks like this pinch play was trying to develop, and now it looks like it's coming back down through the signal line. So it's a tough one. I mean, I see the price pattern improving, but I don't see the momentum characteristics that I like to look for. CTVA continues to improve. We had a pretty nice little pinch that developed right here right before it took off and broke out. You see these two lower highs here, and look at the pinch towards the MACD signal line. So that took place after the zero line reversal. You see how this came down, and we got the big green bar as a signal to get things going. Now, sometimes it plays out this way where you get the signal and then it takes a little while. You have to be patient, and you got to put your stop back down under here or under the big green bar and give it a little time to get going. And now it looks like it's trying to get something cooking here. And we finally got the ADX crossing above 25 on the daily chart. So 50 should be pretty good support on any kind of dip here. I do like this pattern. I think this looks pretty good. Okay, I got another question on both ETHE and BTC. So, and the question was regarding how I look at this 40 week, because it looks like we're bouncing off the 18-month line. You see how we pulled back and found support at the 18-month. We even have a pinch play developing on the monthly, and we have strong ADX. So the characteristics of the momentum are actually pretty good. What I don't like about this pattern is the strength of the decline. You see these two massive red bars? That tells me that there's probably damage done to these smaller time frames. And I can see that this was a pretty strong decline. We are sitting at the zero line, and we don't show a lot of negative ADX action here. But we have a declining 18 we haven't tested. The 18 hasn't crossed down below the 40. We haven't even kissed. We don't have any real signal here. We can't even draw a trend line yet because we haven't made a lower high and a lower low. So I'm not really all that focused on the 40, although it does look like it's providing resistance. It actually looks like to me that you have a down leg, and now you're forming a bearish pinch, but it's right at the zero line. You see how we got this little rally, and we're getting a little pinch because the histogram is rallying a little bit? And we have an opposing trend developing on the daily chart with low ADX after a strong negative reading. So if the MACD turns down here below zero, I would consider this a zero line reversal to the downside with not a lot of room because of the 18-month support. Bitcoin is actually almost the exact same pattern, although it's a little weaker. The drop here was even stronger, and we got a crossover of the MACD from an extended level. And so I could see this more forming a trading range. It's a little bit more obvious when you look at the BTC chart versus the ETH. So in this case, I think they're both telling us the same thing. This was a strong move to the downside on the weekly chart. And we've got some overrun here. It looks like a negative pinch developing at the 40 instead of the 18. Again, I like them usually to develop at the 18, but I can see this reverse divergence developing. This reversal pattern developing on the daily chart where we're getting an opposing trend where the 18 is crossing above the 40 counter to the weekly trend. So if the MACD can cross down here, I would consider that a sell signal into support. So it's not really something I'd necessarily trade to the downside, but it's telling me that this probably isn't ready to go right now. Okay, well, that's it for today's show. Thanks for joining me. Please feel free to send your stock requests to stocktalk@stockcharts.com. And have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.